The 4-step method to high performance trading is a free download to help traders build their mindset routine to improve their trading performance in live time. The 7-step daily routine for high performance traders is about developing the daily routines and processes to help traders continuously develop and get 1% better a day in all areas of their life. They are both free downloads. The links are in the description box below. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're continuing our theme of rinse and repeat simple templates. Signal days, but the same repeating templates on any instrument. So getting away from the idea about trying to read a market, count cycles, look for pushes, gaps, sweeps, etc., and just focusing on the same templates. First red day, first green day, 3 days of breakout traders in the markets, using signal days, inside days, outside days, day zero templates, larger 3-day rectangles for potential range expansion opportunities. We'll look at some very basic examples from this week, and I want to reinforce the mindset of simplicity. Not trying to figure anything out, looking for simple signals from market-generated information using hindsight, because hindsight pays when you understand exactly how a market can set up and how price should behave into the timing window on the day in the session that you're trading to offer us a parabolic trade opportunity. We're looking at the British pound from this week, Friday, the closing range of the week. Let's review that one more time. So repeating that, I'm not trying to figure out what a market's doing today and try to read the market. I'm looking for templates for the trade setups. Friday is the closing range of the week, day 3 on the backside. Monday morning starts a new week, a new timing cycle. Let me repeat that, a new week and a new timing cycle and a new template on any instrument. It's the opening range in a new week. Tuesday, day 2, typically expands the range on the front side of a week. And Wednesday, day 3, we can look for 2 types of trade setup opportunities on instruments that have well-engineered templates. And those are trend trades, day 3 trend trades, or day 3 reversal trades. Now, we're talking about the basic templates. We're not talking about 3-day setups. We're looking at Monday, Wednesday, Friday templates. Wednesday resets into the backside of the week. Thursday, day 2, we can look for range reversal setups. In strongly trending markets, we can see range expansion continuations in direction of the trend, a trending market. And of course, Friday, day 3 again is the closing range of the week. Now, the British pound this week is an excellent example of a market on Friday that closed as a first red day. Now, it hasn't taken out the previous day's low, but it closes as a down closing day from a peak formation high of the week made on Friday, the closing range of the week. Monday makes a lower low. Now you'll notice on this particular chart, I only have closing price and the daily separators. We made a lower low on Monday, pumping up into our first red day signal day. On Monday, the opening range and closing back down inside of the range. So it stayed in range. It made a lower low, broke the low of day, but closed in range. Tuesday was an inside day. The inside day, page 69 in the playbook, is a signal day. Now remember, the playbook is targeting higher time frame setups based off of daily, weekly levels. Traders are looking at these bars for trades, whereas the templates are about targeting the larger templates based on the end of day timing. Wednesday, our reset day, day 3 on the front side, makes a lower low again. Lower lows and lower highs are the setups for the pump and dump template if we have a 3-day setup. Wednesday is the midpoint range of the week. And as we head into the backside, our day 2 on the backside, we have not only our signal day, we have a first red day on Friday, lower lows pumping back up into our highest closing price made on the week, but also closed as a first red day on that week itself. So just to be clear, we know this is not our first red day as Friday was, but for the purposes of this video, I want people to understand we have a first red day signal in the new week inside of our previous first red day, Friday, the closing range of the week. And for those that still ask about going over peak formations, there are videos in the playlist on peak formations, and I will repeat this. Peak formations form the daily boundaries. Definitely one of the extremes is formed in a session peak formation. Now, sometimes we'll have peak formations that are made, as we see on Monday in the US window, inside of a weekly peak formation, but that forms a new high of day once the day closes. So let me reinforce the understanding that closing price is what gives us our signal days, whether it's first red day, first green day. We can have markets that break out and close in range still, but we trigger counter trend breakouts into the markets, which we went over in our last video. But on Thursday, on our backside of our week, we have a pin hammer. This is a 1 hour chart. So remember, targeting higher time frame understanding, but entering in on a smaller time frame when we align ourselves with a larger best trade candidate setup. A pin hammer closing at the end of the London hour open, similar to our US window, a 3rd hour entry and a low hanging fruit after major red news in our 3rd hour in the US window, closing in breakout on the backside of the week. And it's really simple again. The front side of the week, Monday, Tuesday, Wednesday. Why is it the front side? Because that's the front side of the week. The back side going into the closing range is Wednesday, Thursday, Friday. This is a pump and dump template that over the larger 2-week window, if we just consolidate this, started at the low of the previous week, which was the new month, the new timing cycle. That formed our low of the month on Monday, last Monday, the December 2nd. The new week started the backside of the larger template. Day 1, day 2, day 3, reset, lower lows, lower highs, and the parabolic continuation on day 3. 2 types of trades on Friday on the backside of the week. We have trend trades, reversal trades. We have a pump and dump template. No major red news on the Friday for a 2nd hour 9 a.m. collapse back to the low of the month. So just reinforcing simplicity. We're not counting cycles, pushes, gaps, sweeps. I'm just looking for setups. First red day, day 1, day 2, day 3, lower lows, lower highs, pump and dump, low hanging fruit continuation, US window, and a day 3 trend trade, no major red news, 9 a.m. back to the low of the month. A perfect, easy money making setup. Day 1, day 2, day 3, if there was nail and bail opportunities inside that traders decided to execute, entirely their own decision process, but the larger all-in opportunity came on the backside of the week. Our universal entry criteria is met, and as our 3rd hour begins in the London window, we have the collapse coming out of consolidation, a peak formation already being made. You'll notice closing price from Wednesday acts as a ceiling, and our US session low prior to the close of the day gives us a smaller pump and dump template. After major red news, we have our 10 a.m. collapse and continuation trade, depending on if traders took the nail and bail or sell and hold or left a trailer, into free cash Friday. Again, no major red news, 9 a.m. collapse back to the low of the month. A 50 pip drop. Zero stress, zero emotion, zero thinking. Front side, back side, a pump and dump template, first red day signals on the British pound. Next, we're looking at the NASDAQ, and the beginning of the month closed in breakout. Our first week closed in breakout. It's important for traders to understand that when a market closes as a down closing day, a first red day per se, in a market that is in breakout, that can be a 1-day pullback. And we'll look at an example of that in a moment, a different example, where pullback days are opportunities for trend continuations. Now, we just saw on the British pound, a market that closed as a first red day on Friday, the closing range of the week. The NASDAQ closed in breakout from our beginning of our new month, a market that was closed in breakout, continued to close in breakout, a down closing day on Thursday. A red day, again, how does price behave on the day? It continued with the trend trade on free cash Friday, closing in breakout. And then on Monday made higher highs Remember, on the British pound, we made lower lows on the inside. The Nasdaq made higher highs on Monday, the opening range of a new week. Higher highs, and then closed below the open as a first red day. Now, Tuesday gave traders a day 2 trend continuation trade in line with our first red day thesis that closed at the low of the week. So it broke down, pulled back, and closed semi in breakout. We'll zoom in here in a moment. But I want traders to understand we have a market that has now broken out. There are 3 things that markets do. They break out, they pull back, and they continue. They break out, they pull back, reverse, and fail. Failed breakouts. Or we trade sideways between a high-low in a trading range. Now, typically, we're looking for opportunities where they're going to continue the trend or reverse the trend with a parabolic trade setup. Now, I want to clarify to traders, this isn't about reading the market. This is about hunting out setups that offer parabolic opportunities. So traders need to understand there's a difference between where's a market going, what do I think it's going to do, versus where's the easy money-making setup on any instrument. So we have 2 types of trade opportunities on day 3. I'll repeat this: reversal trades or trend trades. Day 1, day 2, day 3 can blow off in the direction of the trend. Or in this particular case, we would consider this a reversal from a market that is breaking down in a new week, but it's actually a trend continuation opportunity. Now I'll repeat the phrase: train your eyes to move horizontally at the levels. We're at the low of the week. We've made higher highs in a new month on week 2. We've taken out the previous week's high. Higher highs are the setup for the dump and pump template. Now, how does price behave on the day? Train your eyes to move horizontally at the levels. Day 1, day 2, day 3. Then we saw the market break down, consolidate into the high of Tuesday, where the breakout occurred on Wednesday into the backside of the week. Remember, day 1, day 2, day 3, reset. And then Friday pumped up to the high, all-time highs, and offered traders a very simple 3rd hour, 10 a.m. reversal back to the low of the current day on Free Cash Friday. There was no major red news on the calendar on Friday, but the market mysteriously pumped up right at the beginning of the New York Open, and we'll point something out here in a moment. 1, 2, 3 5-minute bars in breakout right from the open, an engulfment, and the last 5 minutes of our 2nd hour closing as a bullpen hammer. We now have 4 pins into the high, 4 pins into the high as our 3rd hour opens at 10 a.m. at the all-time highs. The market breaks down, engulfs, and pins one more time up as our 3rd hour trades, and breaks down back inside of the high of day from our first pump, our range expansion pump, for the dump back to the low of the day on the closing range of the week from all-time highs. Just going back to our basic understanding: opening range, range expansion, midpoint range, range reversal or continuation, and then the closing range of the week: open, high, low, close. Simple as that. If you're going to be looking for a range reversal opportunity or a closing range opportunity, we're looking for those at the extremes. On a Friday for closing out the range, or on a Thursday for range expansion, or we can get 3 days of breakouts for a potential range reversal opportunity. Let's take a look at that. Now, on Monday, gold broke Friday's high of day on the open. It gapped, pushed higher, and that confirmed Friday now is a day 1. Now, why is that? Now, I'm going to go back and just explain. There's been a lot of confusion talking about cycles and false breaks and everything else, and I'm just going to go back and talk about simplicity. Wednesday's the midpoint range of the week. We had a higher high. It dumped down into Friday, made a peak formation low. Non-farm payrolls Friday, closed back in range, broke higher on Monday. That break of a daily high level now confirms this peak formation low of Friday. So we break out and close and break out. So just explaining, traders are looking at the little bars saying what's your bias, and I'm saying I'm looking for the templates as they set up. I don't care where it moves. I don't care where it goes. I don't care how much it moves. I'm looking for the setup that's going to be offered to me in my session based on one of those templates from the playbook. We have day 1 breakouts in the market on the close of Monday. 2 days of breakout traders in the markets at the close of Tuesday. And at the close of Wednesday, 3 days of breakout traders in the markets. So I want to talk about a couple of things here. Number one, on Wednesday, traders may have shorted it in the Asian window. A fantastic parabolic reversal coming at the end of the Asian window. But then that peak formation low trades back up to closing price, coiling into a parabolic formation. And traders have said, well, why did the 3 days of breakout trades fail? And I'm saying to them, well, the market's still trading. It's based on closing price. You're trying to trade against a market on Wednesday that's still in breakout. So again, coming back to the understanding that traders are the Fugazi are all the candles. What is the template? What is the setup? The little bars and catching the moves is the Fugazi. What is the larger template that is setting up? Front side, back side. Well, obviously on Wednesday, we don't have a signal day. There's no first red day, but we do now have 3 days of breakout traders. So I'll explain that concept again, that we can have day one, day two, Wednesday signal day. In this particular case, the market is still in breakout. Now we had a parabolic reversal for traders who were savvy to that setup on Thursday, Wednesday evening, the Asia session, North America time. And just by looking at this, traders said that was crazy, you're counter trending a strong market. Now let's go back and understand the larger time frame template. Back this market up a couple of weeks, we can see now that we're at a high of a previous week's range. And we'll just bring this across. We're trading up into that on the third day of closing in breakout. But if we back this up even more, we can see that we are now up into an area where there were higher time frame sellers entering into the market. Higher time frame sellers. And that's where the reversal began heading into November. Higher time frame sellers came into the picture up at these levels, and we've just now closed 3 days in breakouts back up to that level. Now this breakdown in Asia is what traders could term a break in structure. Why is that? Because we've traded down now through higher level longs. We haven't broken a daily level, but we're on day two on the back side of the week, which remember we talked about Thursday, day two on the backside is a potential day for range reversals in a template. 3 days of breakout traders in the markets. Train your eyes to move horizontally at the levels. Lower lows, pumping back up and breaking down prior to our US session open. Talk about two types of opportunities on well-engineered templates. They will either be a dump and pump form or a pump and dump template on the day if indeed that opportunity presents. We have a pump into the high bull that's already broke down from higher time frame sellers. We've gone sideways at the high of the month, high of the week, high of the day into the new timing window for the parabolic collapse on Thursday. Range reversal after 3 days of breakout traders in the markets. Even on our 1 hour time frame, we have our universal basic model for trade entry criteria met, which already confirms that on our shorter time frame, we already have our entry criteria met. But timings, levels, behavior, or price, we had 8:30 major red news for the continuation collapse. And then coiling sideways, train your eyes to move horizontally at the levels. London session had the low-hanging fruit continuation trade, as did the US window. An Al Brooks H1 heading into our timing window, a 1 hour pullback, breakout pullback, continuation on Free Cash Friday, taking out the low of Tuesday and breaking down back into our opening range. And if we just bring this bar back down to our breakout of Friday's high of day level, we can see to where the market traded back to on Free Cash Friday, back into breakout traders from Monday, day one on the front side, pump and dump template. Now, simplicity, rinse and repeat templates, not cycles, not pushes, not gaps, sweeps, hunts, soups, anything else. Pump and dump and pump. 3 days of breakout traders in the markets on gold. Now I want to go over an example of some different variations, but underlying the importance of just understanding basic, simple concepts. Day 1, day 2, day 3, breakouts, and also the simple stuff. Markets break out, pull back, and continue. They break out, reverse, and fail, or they're in a trading range. The traders are getting all caught up in minutia from misinformation and silly stuff, and they're all worried. You're actually getting focused on the candles and catching moves, but you're missing the larger big picture idea. Timing windows. And this is a great example on the Aussie dollar, a market that closed in breakout and the next day closed as an up closing day. Now, paying attention to markets and where they break out, the market is still in breakout, but we have a market that's broken out now and pulled back on Tuesday, day 2, and then continued on Wednesday, day 3. Day 1, day 2, day 3, two types of trades, trend reversals or trend trades. Asian session opportunity. Well, this is an Asian cross pair. Aussie dollar could trade heavier in the Asian session, funny enough. We have a day 1, day 2, day 3 closing in breakout again on Wednesday and closing as a first green day again. But it's not a first green day. We're still in breakout. It's an up closing day in a market that is in breakout. Hal Brooks calls these H1s. These are great trend continuation type signals when markets are in breakout. So several traders will say, well, it didn't work. It wasn't a first green day. And I'm saying to those traders, no, you're trying to counter trend a market that's in breakout. So if you don't learn about the higher time frames, you're still going to be looking for cycles, pushes, sweeps, gaps, and you're going to try and counter trend a market that is in breakout. New month, new timing cycle, possibly a new direction, lower lows all the way down and lower highs. I have traders say to me all the time, well, you keep changing the rules. And I'm saying, no, you're not understanding the big picture. Lower lows, lower highs. Market's still in breakout. It closed on Friday in breakout. Now, let's go back to a simple understanding. We have a market that broke the high of day level on the previous Friday, the end of the month. Monday, the first day of the trading month, broke a low of day level. That can confirm possibly that we now have a peak formation high on Friday in a market that's made lower lows. Lower lows on the inside is the pump and dump template if indeed it sets up. Now that continued to break down and offer pump and dumps all the way down even into our new week, an explosive parabolic short squeeze in our London window that took out the high of day in a new timing cycle in a new week, which means that this could possibly now be a peak formation high. We break down again on day 2, expanding the range on the downside. Day 2 typically expands the range, and in this particular case, we've made lower lows again. Now, just to repeat, you'll notice I'm not trying to tell you what every little bar is so you can catch the move. But we have a peak formation, so we obviously had an opportunity in the Asian window. Train your eyes to move horizontally at the levels for coils in the session window, low-hanging fruit in a market that's breaking down. Lower lows is the possible continuation on day 3 for the collapse in our Europe-London window. Now we have broken down if traders are trading at the low like this. Now obviously nail and bail. Why is that? Because we're at the low of the month. We're trading at the low of the month in a continuation trade on day 3. Day 1, day 2, day 3. Closing back in range. Train your eyes to move horizontally at the levels. A market on day 3 heading into day 2 on the backside, coiling sideways at closing price, potentially now is a parabolic opportunity on day 2 in our Asian window. Now there was major red news on the Aussie dollar, so obviously that would have been either a news momentum catalyst opportunity or no trade at all for traders. But we had a news momentum catalyst opportunity after news release for the reversal trade into low-hanging fruit from our day 2 collapse on the front side of the week. Day 1, day 2, day 3. Two types of opportunities, reversal or trend trade on day 3. Day 2 reverses the range, higher highs. We broke a daily high of day level. We haven't broken any other high of day levels except for Monday. Day 2 on the backside, we've broken the high of day level. We now may have a market, depending on how price behaves on Monday, our opening range, trading back into our peak formation low of the month for a dump and pump opportunity heading into our new week, our new timing cycle. The point of this I wanted to emphasize was that we can have breakout pullback days can give us signals for trend continuations. Traders are calling every up candle day a first green day, when in fact in this particular template, new timing cycle, new month, we have a market that has broken out, pulled back, and continued to break down. Breaking out, pulling back, continuing to break down. Non-farm payrolls, new week, new timing cycle, a parabolic reversal, breaking the high of day level before dumping back down to our low of the month. Higher highs day 2 on the backside, possibly setting up now for a reversal or dump and pump opportunity into our new week, our new timing cycle. Time will tell. We'll see how things trade this week. But basic, simple templates. Day 1, day 2, day 3. Monday, Wednesday, Friday. Opening range, midpoint range, and closing range of the week. Signal days and templates, traders. Keep it simple. The more you add in variables and you're counting sweeps and cycles and little bars and pushes and counting gaps and everything else, the more you're going to be scattered all over the place. Focus on rinse and repeat setups. Look for the instruments that have easy money-making trading setups. Execute the trade, lock in the money, manage your risk, and walk away. Keep it simple. Have a great day, traders, and may the markets go with you.